put the spotlight on the IT space and specifically what's happening with TCS, because UBS has come out with a note where they have upgraded the rating on this particular counter, have raised the target price as well. So let's understand what's in store for TCS. And for all of this, Anisha is joining us live in the studios. Hi Anisha, what is UBS focusing on for TCS, and is there any commentary that could actually bring some cheer to the whole IT space?
To the whole IT space, maybe no, because it's very specific to the company. They're talking about how TCS can probably lead the sector growth. So that's their verdict, and they believe that it has more rooms on the upside, and that's the reason they have a buy rating with a target price of 4,700 versus 4,050 that they had earlier indicated. Now, they are expecting that TCS is going to lead the sector in terms of earnings to the tune of 100 to 150 basis points. There is scope of margin improvement as well. In fact, they're talking about margin improvement of 100 basis points over the next 4 to 6 quarters. And that's because the impact of attrition coming down will only happen with a lag effect. And that's expected to bump up the margins. Utilization is another lever that, Samir Siksaria, the CFO of the company, has been talking about time and again. That's expected to play out as well. And overall, the ramp up of large deals that the company had bagged, whether it was BSNL, whether it was Nest or Aviva, all of that is something that will come into picture in FY25, and that would lead the growth going forward. Now, in terms of the valuations, yes, the stock is trading above its own historical average. If you look at it, it's 26 times, I think, FY26 earnings, 28 times if you look at the FY25 earnings. But the way you need to look at the valuation is compared to the peers as well, because the entire sector has got re-rated. And if you look at the premium that TCS is trading at versus the peers, that has narrowed. So if you take the historic average of the premium, then TCS needs to trade at a higher valuation, and that is what UBS is talking about, and that's why they say that Street hasn't factored that in, that there is not only going to be an earnings lead that will come in from TCS, but there will be a valuation re-rating as well, because the premiums have to be escalated, and that's why they have a target price of 4,700. The stock is clearly reacting that 2% higher, but the rest of the IT pack, barring maybe a Persistent and a couple of other names, are still in the red. And the recent commentary that I've read from the other analysts as well, who are talking about the sectoral takeaways, it's nothing incremental positive, it's more of status quo, and that's been the case for the last 2 to 3 months. So just waiting by to hear anything positive, but for now it's status quo on demand, but individual names can do differently.
Absolutely. I think UBS has made it a tad bit easy for you while you're penciling in or making your estimates for TCS Q4 earnings, isn't it, Anisha? But UBS, there you go, upgrading TCS to a buy rating, raising the estimates, and the stock is actually liking it, or the investors are liking it. The stock is trading higher by about 1.8%. But what should you do with TCS in your portfolio if you're already holding? Then which side of the fence that you should tilt when it comes to TCS? And if you're not holding, then is this the right price to go ahead and purchase the stock? Let's bring on board our experts for today. We have Kush Bora, who's joining us on the technicals. We'll have Rajesh Agarwal joining us shortly on the fundamentals. Kush, since you're there, let me ask your take coming in for TCS. How is it looking on the charts to you? Because we know that the IT pack has been taking it a bit easy. They have been in a very, consolidatory sort of a phase or so, you could call it. Where do you see TCS headed from your own, and what's your outlook for the entire Nifty IT pack?
Hi, first up, a very good morning to you and to all the viewers. Well, if you speak about TCS particularly, then these are the levels that the stock had seen last somewhere in mid or end of 2021, 2022. If I look at the chart across time frames, then it's a beautiful setup across time frames. From a monthly perspective, the stock is completing a rounding bottom formation, and it's given a breakout. 3,800 to 3,950 was a bit of a resistance zone. That was the threshold. The stocks trading comfortably above that. I think from a near-term perspective, this momentum could very well continue. Even on shorter terms, if you see, the stock has regained its 20-day moving average and is sustaining above that. So from a near-term perspective, I think 40 to 50 and 4,400 are rather convincing targets on TCS. If you have an existing position and that's from a long-term perspective, then very clearly hold. If you're looking to enter, this is a good time, because the stock has gotten the much needed shot in the arm and is starting to rally upwards. Although there could be a small hiccup and a small consolidation along the way, but I think structurally nothing's too bad about it. So as I said, for a positional target of 4,400 and with a stop loss of 3,900, TCS is still a buy even at current levels.
Okay, still a buy at current levels. The stock is offering a good entry price point at this point in time.